Hello, this is Dave, and welcome to Equities Story. I'm with the amazing Wolf, and this is just a general show advice and not personal advice. How are you doing, Wolfie?
I am amazing. All right, you've got that right. But yeah, I'm going okay. Third day, on my own. I'm starting to get used to it.
Are you getting a bit hungry yet? No one cooking for you?
I know. I have to actually do I've just realized how much stuff Nat does. I'm taking appreciation to a whole new level, Dave. It's good.
So are those sell Natalie stocks going to go a little bit lower, most probably?
Well, I hope not. I probably have to revise my sell Natalie. I don't think I can sell her because she does a lot of stuff around the house.
Oh, that's good. I'm glad she's good. I'm glad she's good for something.
Yeah, well, everyone's got to use it somewhere.
All right, Wolf.
Now, yes, there's some good results and not so good results today. It's been I suppose, a mixed day, but let's talk with the good stuff first, shall we?
All right, so AOU, massive move up technically. Obviously, I can't buy this on this move. I need to maybe buy it off a daily, but I'll watch where it is by the end of the week. I suppose my question for you, we like to mix it up a little bit. Fundamentally, are you going to buy this?
I want to. I think look, first of all, they really surprised the upside because there was talk from brokers saying this result is going to be fairly bleh, right? They looked at the peers were not going that fantastically well. And lo and behold, these guys have completely blown it out of the water with a really good result. Growing, profitable. So everything you want to see and surprised at the upside, fantastic, plus a good outlook. The only thing that's thinking to myself, should I be rushing into this, is the fact that it's trading at about 50 to 60 times now after this result. I've just done the figures. It's about, I think on this jump today, which is about 20%, that means they are trading on 60 times.
Right. That's a problem in this sort of market.
Yeah, it is. But you know what? The markets looks like they're prepared to pay 60 times for a company that surprises on the upside, is profitable, and really a market darling, right? So maybe we just need to somewhere along the line think, okay, if the market's prepared to pay for the market darlings like this, what's the other company's worth, right? So anyway, look, it's interesting. I would rather pay it $32, $30, somewhere around there. So I just got to be patient, I think.
Yeah, I'm actually really surprised, Wolf, with the price action. I mean, I understand it was a good announcement and people are excited about it. But especially also you saw the Nasdaq come off, didn't you? Really hard last night, and I think you just got to be a little bit careful here.
You do. When you're saying that we might come off, you say next month. I'm not rushing into this sort of stuff. I'm going to wait.
Yeah, we talked about the volatility coming now this week, and we're starting to see that, aren't we? And it's the markets were. I think you've got Jackson Hole, where the Fed chief is the market's really interested to see now. All the other guys in the Fed on the Fed board are saying, "Nah, we got to smash this inflation." He's being a lot more careful with his words, because if he spoke like that, then the markets would possibly go belly up. So they're watching very carefully his rhetoric on Friday, which is going to be very interesting.
Agree.
You certainly want to be really careful holding.
Well, you probably wouldn't want to rush into anything this week.
Yeah, I hope.
Unless it's something absolutely amazing.
Wolf, we've got Ansels. So get the chart up. Apologies here. It's under trend, so technically we're not there or interested. And maybe this is the announcement. Maybe you could talk us through and tell us what you thought of old Ansels.
Well, look, first of all, good on me for good contrarian play. Thank you very much. You're right. Picked it up quite nicely. Was really oversold. I was really scared about the result, to be honest, Dave. I wasn't sure what to expect. And I know that it wasn't going to be as good as the previous thing. And that's why the markets really smashed it down from the over 30s down to 20. But I thought, there's value there in this. And if the result is not as bad as people feared, then it's going to be okay. And so it proved to be, right? So it was obviously a big come down from its FY21 result. You can see We've got
Yeah.
growth down, everything down, dividends per share down, everything was down, right? But we're still within guidance that they said at half year results. So the market's sort of going, well done, boys, well done. And the outlook, probably better than people expect. And again, for me, I was looking at what they're going to come up in the EPS line, and they're looking at about midway point, roughly what they come up with this time around. So flat for 2023, and hopefully that's the sort of conservative outlook for Ansell's. So look, at the end of the day, trading on 13 times, no growth right now. I'm thinking maybe profit time for me, or hold, right? One of those two things. It's a company that obviously we made some money on because we played it at contrarian. Like I said, because there's no growth, it probably tends for me go, I'm going to take that profit unless update down the track somewhere. If they come up with growth, then maybe I will get back into it again.
They've exited their Russian operations. Is that a big loss for them?
No, I think they're talking about 13 point. Well, look, it's a loss for them. 13.4 cents is a substantial, 10 to 15% hit to the EPS line. But at the end of the day, Dave, I think it's the right move.
Why?
No, because Russia is just volatile. I suppose it's a difficult place to make money in. It could be completely smashed.
Okay, that's interesting. All right, just always interested to have your views on these things, Wolf.
Yep.
Mad.
Mm-hmm.
It was a hot stock this week.
Mm-hmm.
It certainly delivered with a very strong announcement. And what I thought was interesting was their growth, Wolf, looked very good for next year. You were certainly impressed by other parts of the announcement. Could you talk us through it? Yeah,
well, let's have a look at the announcement. Bring it up so we can see for everyone, because this is one of our favorite stocks. Plus, you put it as a hot stock. It's done fantastically well. Saying that, Dave, I'm looking at the numbers. So while the numbers were all pretty good, it's trading on current numbers 22 times. If you extrapolate growth for next year, which is over 20%, and this is for the outlook, which is again pretty good, you're looking at trading at about 19 times, 18 times, if they can even up that, right? Which is not bad. That's why it's either a hold for me for the long termers, or I think if you've taken the hot stock and you want a quick turnaround, 10% is pretty good. I'll take a profit.
Yeah, there's nothing wrong in this market with even 5%. So
well, look at that. I mean, record revenue for 400 million. I think they're talking about 500 million in revenues next year. So that's going to be about 20-something% growth at this stage. Really well-run business, expanding internationally as well. I'm liking this a lot, Dave. This is one of the better results this financial reporting season.
Yeah, they're looking, I think, about 20-25% growth, isn't it, on revenue for next year?
Yep, correct. So I'm very happy with a company that can do that.
Very, very, very good. All right, Wolf. Next, Monodelphous.
Yep.
What's your take on Monodelphous?
Look, how I stand with contractors, right? I'm not a huge fan. However, they should be doing quite well in a market that's really been driven by the mining space. There's a bit of infrastructure as well going on, a lot of spending. So at the end of the day, they should be going well. They are, and a lot of these contractors are going well. There is that underlying current, though, Dave, that inflation is hitting them, plus the lack of workforce also is hitting these sort of things. So maybe what I'm thinking is this next 12 months probably be much harder than the last 12 months. So that's why I'm not hugely, rushing into this sort of space. I'm more of a take a profit type stuff if I see a good one.
All right, that's interesting. All right, thanks for that, Wolf. And now, I mean, looking at the charts, there is a little bit of resistance here, so there's an argument to take a profit on today's move if you own the stock. SRG. Yeah, this is. I mean, come on, in a really tough climate, how well has this stock performed, Wolfie?
Fantastically well, Dave. And again, for me, tendency to take a profit, but I can understand moving your stop losses up and just playing the stop loss game, which is absolutely probably the right thing to do anyway, right? However, my brain goes, oh God, I'd love to bank some profits on some of these things.
Well, let's bring this one out.
When I know, especially when there's volatility coming.
Well, it's only that I've told you there's volatility coming.
No,
Yeah,
well,
you really trust me now, Wolf.
You've got
It's
to do
good.
this out of me.
You never used to believe any of my witchcraft. Now you're going, yeah, no, yeah, you sell because volatility is coming. Yeah.
So you brainwashed me with that. Now I'm scared with everything. You tell me, there's going to be a little bit bump. I'm selling.
Well, you know what? Like I said, we're starting to get that volatility we talked about. Let's hope I'm wrong, Wolf, because our last thing you want is a really strong crash in the markets, but it just doesn't
All right,
look very.
tell me then. Give me a pretty tight stop on this then for those that are holding, because the chart still looks good. So you look at that result and you think to yourself, I'm probably going to hold, but I'm going to need to be protected myself and hold my profits. So where would you put your stop?
Look at that record work in hand.
Yeah, they're going very well. Look at the numbers. Right? Look at the numbers. Everything in the green, and they are nice thick numbers on the change, right? 50, 30, 50, 68%. That's very good.
I mean, that's quite. What's impressive? Look at that NPAT, right? 14.9 to 23.4, right? And the revenue isn't up that much. So
you know what? Look at the margins improvement, Dave. This is what
I know. That's what's interesting. I mean, everyone's getting killed on margins.
No. And these guys are expanding their margins.
And these guys are doing well. So I don't know. Does that maybe that worries you a little bit? No, but that's pretty impressive, Wolf, isn't it? Terrible.
It is incredibly impressive. You got to. That's why you have to go to yourself. I'm not going to sell this. I might just use a stop loss if they can keep going with that sort of performance.
All right. Well, I know you're the stop loss king, so go on.
Let's use that 70 cents. So let's be really tight. Let's move it to say 68, 67
on a weekly. So by the end of the week, if it goes 67, then maybe it's a sign it's going sideways. Otherwise, a good chance that this could go on with it on that announcement.
Yep.
PLS, Wolf.
Mm-hmm.
Oh, not bad, the price action, actually, to be honest with you.
Oh, good result. I mean, from a loss last year, Dave, to like 500 million odd in profits. Thank you very much. I mean, this is finally got to a stage where everything is in place. They are producing lithium, selling lithium, and they're making a profit from lithium. I mean, everything's now in place, going very, very well. All you need now is that lithium price to sustain where it is or go higher, and they're going to be swimming in cash, Dave. That's the beauty about it. The only thing I saw negative in that whole result was the fact that the costs are going up, but we know that are going up across the whole industry.
Sorry, so what sort of price does lithium have to be for these guys for them to make a profit?
Well, they're making profit already on this.
Yeah, but if it went down to more recent normal prices, would they struggle?
Depending what you mean by normal recent prices, let's say they halve from here, right? And I reckon they'll probably still be profitable.
Okay, that's not too bad then.
Mm-hmm.
All right. Okay. Well, listen, it's got actually a buy signal on the daily. If it looked like that, if it's trading around 329 by the end of close today, you could have another good day tomorrow.
Yeah, I think so. Look, I think this is a strong result, I have to say. So I think potentially we could see this taken up back to that $4.
All right. Mr. Wolfie, what about Hub?
Mm-hmm.
Because it's a sector that basically with PPS was in vogue and it was doing reasonably well. How are these guys faring at the moment?
Good, but you know what, Dave? It's just too expensive. I'm just worked out the numbers in the morning, and they're trading on 127 times.
Wow.
So you can see, the numbers here are all looking pretty good. Record platform inflows up 32%. You've got platform revenue up 59%. Fully franked dividend up. So everything on there looks pretty good. The market share is growing 3.95. It's just the fact that the market's just giving it such a huge premium to everything else out there, Dave. I'm just not understanding it.
The world's still mad, isn't it? In a lot of these valuations.
Yeah. I know it's a market darling, right? But there's a market darling and there's market darling craziness.
Yeah. Well, when the market came off in April, March, April, May. I remember, and you're an analyst, and you I was getting the typical comments that well, it was ridiculously valued and it was bound to come off one day. So surely you got to have the same view of all these
Yeah,
stocks.
you do. I think I wouldn't be touching it unless it went back to under $20 again.
Wolf, ALU, it's got to be in that hub. REA, you've got to say it's ridiculously valued.
Yeah. So
go on, say it. It's all ridiculous. It's all
they are ridiculously valued, and it makes you sort of reluctant to get into those stories. That's why I'm looking for alternatives out there. You know, pushing myself into the smaller space, looking at the Ansels of the world. That's the problem.
Yeah, but okay, it's better than being in something that going to get absolutely hammered, isn't it?
Yeah.
I'll talk about getting absolutely hammered. Down 8%, beautiful looking chart. Got to buy that. What a fantastic chart. Got to sell that.
Yeah. Look, and I think this is where the charts lied.
they did lie. The charts are you going to say the charts are not always right?
That's exactly right, Dave. Dave, unfortunately, you say the charts never lie. Yes, they do.
Yeah.
This instance.
They certainly did here, I tell you, you're right.
I'll tell you the reason why is I think it just got ahead of itself. I mean, let's maybe not call it lie, it's just got it ahead of itself, where investors are just gone a little bit silly with it. There was just no growth, right, at the revenue line. Yes, they made a nice profit at the group NPAT line, which means they're extracting value out of Endeavour, which just shows that really Woolies wasn't paying too much attention to this. They should have done a much better job. So they've extracted 11% already out of a flat group of sales. Well, can they keep going with that? That's my question. So for me, it just wasn't good enough. And that's why probably the market's gone down today. It's expensive as well.
And what's that outlook like?
I think that outlook is okay, but you know what? It's trending on 30 times, right? That's the one problem. No growth on the top line. Something had to give.
Yeah. Well, Dan Murphy's is a pretty big business, right?
Yeah. Look, there's nothing wrong with the business itself, Dave. I think it's just the market really got ahead of itself. And I know it's a defensive, and it shows that it's defensive because it's still maintaining its sales. Hopefully there'll be a little bit of growth in 2023, but just on the results, the market's gone a little bit silly with it. That's why I think the chart's lied this time around.
Yeah, I mean, having a look at it. So if you're in it, what do you do?
I think you've got to sell because the dividend's still, it's just not good enough also. And I think there's better stories out there. I think, look, I'd be looking this back up, maybe around below 7.
What is the dividend on it? Yeah, 30. Yeah, it could come back a lot more.
Anyway, look, hopefully it holds on, and then we might look at it differently in 2 months time.
All right, next one, SDR.
Yep.
What's happened here?
Look, I think the market's been very harsh, and it is a little bit fighting back, right? So the initial reaction was pretty strong to the negative side. I really like the company. They came up with a pretty good result, even though the bottom line blew out, but they talked about that already. Obviously, the short-termers sold on the news because they didn't actually read the previous announcements from the SiteMinder. Saying that it's unprofitable, Dave, that's a big negative against the company. And they're not going to be positive. They're not going to be positive until FY24. That's money. Oh, let's have a look. That's what is it? 2 years away, 18 months away. That for an investor, Dave, that's like a lifetime.
Right. It doesn't look. Yeah. Okay. Yeah. All right. Say goodbye to SiteMinder for the time being. But another good story, Wolf. With but again, it's a similar story, isn't it? Getting really sold off.
Yep.
Wasn't a bad announcement, and
no.
I feel a bit sorry for management. They must be scratching their heads and thinking, well, what do we need to do? And down 13%.
Yeah, jittery by investors out there, but again, not without reason. And the reason for this is unprofitable. The actual bottom line blew out even more. that's really makes everyone nervous out there. So down she goes, and she's probably not going to be profitable for at least another year or two. Fair enough. Look, if you're in it, you just got to get out.
I mean, tell me, I don't really get this. They sell caravans, right?
No. Well,
yes and no.
Yeah, yes and no. What the main business is they connect caravan owners with people that want to the caravan, right?
So where's it going wrong on there? Where is it? Is it just the running costs, the staff costs?
It's staff costs. It's a business that's, I suppose, still new, so they have to invest, right, in the acquisition costs, some marketing, all these things that all those young companies have to shell out. They're not going to grow with sitting in the corner somewhere and hope things happen, Dave. It's part and parcel, but unfortunately, the market doesn't want to know at the moment if you are a young company that you want to grow and you have to spend money. They rather reward someone like an Altium that's coming out with a good growth, profitable, but trading at 60 times.
Okay, it's just it just shows how important really mixing the fundamentals and the technicals are, doesn't it?
Absolutely.
EVS. Envirus Wheat. Yes. What's going on here? Because price action today is not brilliant. But I mean, on the other hand, today is a tough day with the Dow down quite so strongly. So what did you make of this?
I don't mind this result. It's not a ball terror. It's grew about 10%. Is it enough for a software company to grow by 10%? You can definitely question it. The good thing for me, it is in a great space, which is the environmental space. So I'm going to give it the benefit of the doubt here. There's growth going to be in 2024. It's got a lot of recurring revenue as well. It's unprofitable. That's another tick against it. So to me, it's one of those, you probably have to take a longer term view. As long as it's hold that 16 cents, I think I'll still be in it.
All right. Now, the best looking chart out of all of them today is presenting itself as XRF, which looks on the technicals that it could work up a little bit higher than here, Wolf. I suppose my question for you, P is 17. Maybe it's a little bit less now. It does pay a little bit of a dividend. Looks like there's plenty of growth there.
Give me the results and we'll go through them, right? Because this is one of those companies that sells the picks and shovels to the mining industry, right? Some instruments like XRF machines. I wish I could own one of those, Dave, where I can just go into the field like I'm going rock hounding, fossicking, and I can pick up a rock and go, and it tells me what sort of mineral content it's got. What a brilliant little tool.
Well, how much are they, Wolf?
I think about 10,000 each.
Oh, I was about to say Christmas. I thought it'd be like $200. I was going to get you a Christmas present.
No, they're bloody expensive things, I tell you.
Really, $10,000.
Yeah, they're not cheap. They're not cheap. But anyway, look, I love those little machines, and every mining company will probably own one or two, right? Because obviously they need something to go in the field. It's like a gun. You go in the field and you can go X-ray the whole bloody thing and see what it comes up. It's a rough estimate, but it's still a decent quick look through, preliminary look through to see what's in there.
How good is that? Okay.
Yeah, I know. It's fantastic. Anyway, look at the numbers. You've got sales up 28%, NPAT up 90%, 6.1 million. And let's have a look at the outlook, Dave. And that's probably going to be the key here. No, go up slightly. We've gone too far. Okay, here, stop right there. So let's see. We've got our order book continues to reach new record levels with production for some product lines booked out for the first half 23. Woohoo, Dave! I'd be looking to buy this, to be honest.
Well, I mean, the chart is an absolute beauty, isn't it? Yep. So, I mean, I think you could buy it here at 69. You could target maybe 80 cents. Give it a go.
And it's not expensive either. This is probably one of those companies that's got everything going for it. I know it's small, and I know it's small means risky, right? But yeah, that's probably one that ticks a lot of boxes. Great looking chart, like you said. I've got a time on a 15 times. That was last year. So let's say 20% growth. You're looking at probably about 14 times, right? At the moment with a
very good,
almost 5% dividend yield. Oh, you can't get any better than this.
All right, there you go. So there's a interesting little buy. So
Yep.
You got to buy at 69, stop loss maybe just under 60,
Yep.
and targeting 80 cents and see how you go.
Yep. That'll do.
Oh, we found one, Wolf, didn't we?
Woof.
It's like you know what it's like, Foster King, isn't it? Really?
But isn't it exciting when you find something good?
Yeah, we found something good. Okay, after all that. Now Kogan, is this any good?
Not at this stage. So
look at that.
They have it. Look, see how the FOMOs took it up, right? When the big green candle.
Yeah, how many people were telling us, Dave, can I buy that? And we're going, no. What are you on about? Look back down.
Yeah.
Looks.
With some of these stocks, you need to see confirmation of at least 2 or 3 weeks, don't you? You can't just buy on one green candle when it has a run, because it just could be FOMO.
Yeah, like it. Look at this back here.
Exactly.
Exactly. The traders get in, they get all excited and think this is the rise of Kogan, but it wasn't. I mean, the rise of Kogan is this. Look, you can't get back over trend. It's pathetic.
No, it's going lower. It's going back to that $3.
Yeah, it does. It looks like it, unfortunately, for Kogan, but he's all right. He's got his nice big house.
Oh, I'm sure he's struggling.
Yeah, I'm sure he's not. Yeah, sweating too much. I'd rather be him than me, Wolf.
No.
I'd rather look like me and have his money, I should say. I don't think I'd want to be him. CQR.
Mm-hmm.
So it's a dividend stock. It's in your dividend portfolio. It's slightly up. It's a good sign. It's slightly up today.
It's a good result. The best thing about it, Dave, is the fact is that there wasn't too much bad news in there. And I think it's going to be fairly steady for next year. For dividend investors out there, steady is good. As long as I can deliver steady, you're happy.
Well, what a nice steady, a P of 4 and a dividend of 6. I'll take it.
Yeah.
ARB.
Mm-hmm.
Ooh, this has been a bit up and down.
This
got sold off 9% and it's back up and it's slightly profitable. Talk about a confused market. So
I think there's been a few like those reactions. Look at SDR now. It's almost back to it's actually what it started at today. Look at that.
Yeah.
So ARB, SDR. There's you can see there's a knee-jerk reactions to a lot of these little things, and it's the volatility is returning.
Well, the old adage, the professionals close the market and the amateurs open it. It's so true, isn't it?
Yeah, up 100%.
Look at everyone studying this and just not being patient.
Yeah. What the actual result wasn't too bad. The only thing for me, and so you've got about 20% growth, right? This used to be 20-30% growth. So definitely the growth is slowed. They didn't give any guidance, and maybe that's why there was a sell-off.
Partially filled.
There was no guidance on there. The problem with no guidance, people just tend to go, I don't know what's going on, I'm going to get out, right? But I think the sanity is returned to this story. And when you look at it, it's actually not too bad. It's trading on 21 times for a growth company that's really a market that has been a market darling for a long time. So I'm expecting to hold probably 30 bucks and maybe trade between that 30 to 36 over the next, say, 12 months.
All right. And a P of 19 is not too bad, is it?
Yep.
All right. Somnomed.
Yep.
So it's been really a poor performance of the story, Wolf, but you've always been a believer in the story, right? So you're just waiting for that story to start to click over. And there's been signs of late that it is starting to click over. So I'll bring the results over and you can
go please, because basically this is the reason why I'm getting interested, because they are now talking about FY revenue growth guidance of plus 20%. Now, that is above guidance. That's actually looking like another good looking year ahead. So Dave, this could be the sort of dark horse of 2023.
All right. So we'll just watch it carefully, watch the charts, and if it starts to liven up, we'll have a look at it. Not
many companies that exceeded the FY22 and they are coming up with a guidance of 20% and still looking so desperate on the charts. I tell you what, they're very interesting.
All right. And last but not least, now this is a horrible chart, and I think a lot of people look at this chart. I think the shorters will be shorting it. It looks absolutely terrible. What's the announcement?
Dave, there's gremlins creeping into this company. I tell you what, the shorters be looking at the chart. If you flip it upside down, a CTM, you'd be going, that's a sell signal. They'll be looking, and I think this is going lower because, like I said, today's announcement just brought up a point, and I'm thinking to myself, oh my God, they've got some issues here in this at current space. So if these issues get bigger and more things come out, we could see this back at 15. I think the shorters will be loving this.
And what are the issues?
Well, bring out the announcement and have a look, and we'll go through it together because this is quite interesting. How they've uncovered something that you think to yourself, hang on a second, why haven't you seen this before? So go up. Yeah, going up. There we go. Credit Corp advisors of customer remediation. So they've got like a program of quality assurance review, and they identified something that's will possibly cost them quite a bit of money, Dave. So this is not good. While investigation remediation will not be substantially completed for another 90 days, the company has commenced the process of advising stakeholders. Now we don't even know what the impact might be here. That's why this is so dangerous. I'd be probably going, sell.
So a review had been that a number of customers had been charged so there's a number of companies that were going to give a reduced interest rate, and they never did. Oh, anyway, I hope they rot. Disgusting company. What?
Anyway, they red flags here. Red flags. You and a red bar, candle bars. that's a double whammy. This is a sell.
All right, good sell. All right. On that note, Wolf. Thank you very, very much. That was a really, really good look, and throughout everything, yeah, definitely.
Don't forget tonight, though, Dave. We got our Ask the Analyst, and we're definitely probably going to speaking some of these stories here. XRF looks like the standout. MAD was bloody good, and Altium, yes, but we just need to wait for a pullback.
Yeah, a little bit of profit taking on most probably equity story people from being odd stock, I should think. But yeah, pretty good there, Wolf. So
I was really impressed with PLS as well. So I think overall, yeah, some good and bad in this whole things that we'd read about. So we'll see what happens.
Filled.
All right. Thank you very much, Wolf, and speak to you later. Bye, mate.
Cheers. Bye.
Bye.